Happy weekend, everybody. Tim Knight here, Slope of Hope. I wanted to dash off a quick video before the weekend began. My good buddy Social Trade sent me an automatic reminder this morning about a date coming up. As some of you may recall, in Social Trade, you can establish as many reminders as you like for any kind of events that are coming up. In this case, there was this Bradley chart, which has all, this was done last December, and it's got all these turning dates. And so what I've done is I've entered the turning dates, and some have gone by, and some are forthcoming. And so it emails me a reminder in the morning that, go check it out. So I've done this with a bunch of stuff to basically put on the rearview mirror, see how things worked. Or in this case, get a signal that, something's supposed to happen. Clearly, this has not been a completely infallible chart. This dip from 728 down, certainly didn't transpire. What it alerted me to today was this more minor turning point. When I did this chart initially, it had been pretty uncanny in terms of direction. Looking at, I'm just kind of jump ahead here because I've sort of lost track of what happened back then. Looking here, 728, yeah, it didn't do a damn thing. I mean, you can see here, 728, this supposedly big turning date. Well, I don't know, in a way, for a couple of days it fell, but, luck, it just shot to new counter-trend highs. So, the cold fact of the matter is that these kind of sweeping predictions, I've yet to see them, really just nail it. My analog back in the day, through about middle of last year, did an amazing job for a while. Then it fell to pieces. But here's another one. This showed the VIX exploding up to almost 50, and then QE3 being commenced only after the market collapsed. Well, we're way up here now, and it just goes on and on and on. So it is interesting just to be able to look at these and see what, if any of these, kind of turn out to be useful. This one right here has been actually pretty interesting, the Facebook lockup, because as these shares have been released, the stock's just been getting clobbered, but that's of course more of a fundamental standpoint. Anyway, as far as the charts go, let's talk about a few things. First, I'll just pause here for a moment and say that I think that the whole QE3, I can't even say it, I'm so psychologically dysfunctional with respect to QE3. They're all trying to drive us mad with this, because all of the he said, she said, maybe, might, could, probably, perhaps. I mean, I sort of lost track of this, but we've actually been talking about QE3 for about 15 months now. And it hasn't come out yet. And, if I were Bernanke, I would be pretty impressed with just how kind of rattling my sword was keeping everything afloat. I don't have to do a thing. I just have to kind of keep hinting at it. This could go on forever. So maybe that's what they're up to. Is brilliant. It seems to me. So the big stuff coming up, of course, is the end of this week. That is on Friday. Is Jackson Hole, which 2 years ago was the start of a huge rally. Last year, actually, it was a huge sell-off in the weeks following. And this year, who knows? I guess what some would hope is that he stands up on a soapbox and screams at the top of his lungs, QE3 is coming, and it's going to be bigger than QE2 ever was. We'll see. I naturally think I'm going to turn down my aggressiveness somewhat before that. Having a huge announcement before a 3-day weekend, I don't know, it's a little nerve-wracking. And then, of course, things won't really be known until September 13, which is the big kahuna. That's the press conference and the new projections and the announcement, if any, or, as in recent history, the slight rewording of the past release. We shall see. But for me, I'm just keeping it small and keeping it spread very thin amongst a lot of different stuff, except for some interest rate items, which I'll show you in a sec. I don't tend to trade Apple, but this has been pretty much the only stock that I've been saying looks like it's got a nice, clean upside target. And given the news on the patent that came out, after the market closed on Friday, it's almost certain that there'll be a big pop in Apple on Monday, like $1 billion plus verdict. The after hours trading was already right around 675, and if it bears repeating, my projection on this has been anywhere from about 720 to 760, in that vicinity. If it gets there, it'll actually be a relief for me, because that'll actually take a lot of kind of upside potential off the market in general. I think it'd be terrific if Apple could actually fulfill that target. I've been watching crude oil closely. Here is the front month on crude, and this line in the sand here is sort of my, this is my thick red line that it just must not cross. A less important line, but on Friday was important to me, was this fellow right here. As we zoom in, it had pushed higher, and around here I went ahead and did a short on DBC, and it eased away from there, even in spite of the kind of the late day rally we had. The ES has been continuing to do a really surprising job and an amazing job clutching to this trend line. Of course, it bobbles up and down about it, but by and large, this is a huge draw. And the big question is, will we reach escape velocity away from not only that trend line, but also this horizontal line, or will we simply ease back down into the snugness of this wedge, getting down to about 1375 or so? Clearly the diametric opposite of the one of many possibilities with QE3 is, instead of standing on a soapbox and screaming, they could on Friday simply say, well, we're going to just keep trying our best and we'll use tools as needed, which has been all they say for a long time, and we could have a sell-off. There's a lot of, how shall I call them, pivot points here. I mean, there's the one with respect to Jackson Hole, there's the one with respect to Europe itself, and there's the one with respect to the September 13 announcement. After that, I think we can breathe easier, because we'll know kind of what hand we've been dealt, because I think it's going to be kind of all clear until the election. So I wish I, had a perfect crystal ball to tell you exactly what's going to happen. But as I've said before, even if I knew exactly what was going to happen with the news, it's impossible to tell what the market's actually going to do with that information. Now, quick look at the euro here. I actually have a place to go, so I better pick up the pace. We still have some upside left potentially in this. This is still on an intermediate and long-term basis a very bearish chart. I'm still very comfortable with the idea that we're going to head down much lower to 1.13 or so. We've been doing this counter trend push ever since July 25th. There's a little more room potentially to the upside, but some announcement or lack of announcement could really allow things to slip as they have before. So here and here and here, just time and again, in spite of these pushes higher, the greased pig gets away again. Although with less gusto, it seems increasingly. But to my view, this remains a bearish pattern. Although looking at this very large range we've been in, we're obviously much closer to the lower portion of this range than we were up here. Okay, now at the risk of upsetting any of our gold friends again, I also remain steadfast in my bearishness on the miners. I think that the rally we've had up to this horizontal line may be a golden opportunity. I've got a short in and some puts on GDX. But, and if we do push past this, that'll definitely put a big, big damper on the analog. It won't completely wreck the prospect, because to my view, there's an even, and I'll get rid of this in a sec because it doesn't fit the analog, but there's an even more prominent zone of overhead supply up here. So even if we do get past this level, this I think will be much harder to get past But having said that, it'll definitely put a crimp in the analog, which supposedly we're round about here right now if this analog is to be believed. And of all the analogs I followed, this one has been sort of the most steadfast for the longest amount of time. You know what? I'm just going to wrap up with the interest rate stuff because this is getting long. The only big shorts I've got right now are two. I'll show you those in a sec. They're both interest rate sensitive. I have been watching very closely the Treasury bond market, and oddly, the bar is not shown here. Thank you, profit charts. But we actually did get up back to this level with a nice shooting star pattern. Perhaps if I go intraday, this will show better. Yeah, so we had this big top, a fall, and then a retracement. And what I think may be in the cards is a harder drop to more severe levels illustrated by TLT. So we can see here that we got up here, and what I'm aiming for is a drop and a crack of this trend line. Now, TLT is one of my big shorts, and the even bigger one is a little more obscure, IEF. Kind of the same idea to crack this trend line. And this is kind of the best of both worlds for me because it allows me to short, which, always tickles my funny bone for some reason. And the other thing is that it actually is a nice hedge with all these short equities because although I think bonds and equities may find themselves falling together, if the interest rate stuff behaves simply as a inverse, more or less, to stocks, then this will help hedge some of the pain from a stock rally. So again, those are my only big shorts is TLT and IEF. And on that note, I've really got to go. Have a good weekend, and I'll see you on Monday for what promises to be an interesting week.